Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis avoiding all the Wall Street hype. Today, Monday, April 14th, 2008. Well, we saw the markets move basically in a flat pattern today. There was a little bit of an upswing, a little bit of a downswing, but in a very, very tight range as the markets just paused. You know, we always talk about after these monster moves in the markets, whether it's a big up move or a big down move, the following day often is a relaxed kind of pause day where the markets don't go up or down big either way. You see more of a light volume market standing still. And that's exactly what we saw today. There was no craziness in that. Pretty much what's to be expected after a move. And here's the intraday chart, and you can see that in the chart. There's really no craziness here to be spoken of. You can see a beautiful little double top there in the chart right from here to here. Once we hit that in the, let's see, that was around 1 o'clock in the afternoon, you could basically short right into that, and it was a great shorting opportunity at the double top. You almost saw a little bit of a W pattern forming here, which we were watching, but it really never played out during the course of the day as you had to move back down. And you could even look at that as the beginning of an M pattern, but again, it didn't play out as the market closed right here, so stopping any formations in this chart. You know, we will continue to watch the 60-minute, but nonetheless, you had a basic sideways moving market. I mean, you could almost draw, let's even draw some trend lines here through the lows, and we can kind of focus in on that a little better. And there you go. So this is the way the market moved today, and you can see, again, a range. You have the upper line, the lower line, the moves up and down within that, and markets closed across the board slightly to the negative side. All right, and just to go over what the markets did, we saw the NASDAQ trading down about 14 points on the day. The Dow was down 23 points, which is nothing on the Dow. The S&P was down 4.5 points, which is virtually nothing as well. We did say oil and gold move up a little bit today. Oil still is hanging right around that double top area, and it's going to be key to watch now. And we'll look at the USO here. All right, that's the intraday. We'll go to the daily USO chart, and you can see this double top in formation here. Now, a lot of you guys will say, well, isn't it above that double top? Well, yes, but at the same time, oftentimes you guys know we talk about how they always try to move that up a little bit above a double top before flushing it through to get all the amateur longs on board. Now, the interesting thing about oil is that there's multiple facets to oil. First of all, you have the US dollar. That's the number one. When the dollar weakens, it causes commodity prices to go up because it's traded in US dollars, and that's why we've seen a major increase in oil and gold across the board over the past few years. The dollar has just gotten continually weaker and weaker. The other issue with oil is geopolitical. Now, you have Venezuela, Iran, and all these different countries that have a sway on where oil goes based on rhetoric that they speak of or actions. So there is multiple characteristics there within oil, but nonetheless, we're still watching this. If this starts to break higher, then it looks like it'll go higher. Otherwise, if you see this fall back below this line, I would guess it comes back right into that 20 moving average and possibly as low as that 50. Should it get down here, you're going to see good support right into that 50. As you can see, that trend line also has support right at that 50, so the trend line and the 50 moving average will be good support. If it breaks that, it's going much lower. But as of now, it's hovering right around that double top area on the chart, and we'll see if we continue to move up, which would mean a new breakout to a possible new chart setup, or if we fall back in, we'll see where that goes. All right, so again, as we talked about the markets intraday, guys, the markets just did their own thing today. They're sideways trading. We're now looking at the SPY on the daily chart, and you can see what basically happened. You've had this monster move up here, okay? Take a look at that. So you went from this point to this point, so from your lows to your highs, and now you're having a retrace back down. Now this pattern is still a bullish pattern. We are still focusing in on this necktie. We need to get back above that necktie, in our opinion, within a couple days. You usually have a day or two of leniency in the markets as nothing is directly perfect. Anytime you think it's going to hit that necktie and then take off, the chances of that happening are very minor because everyone expects that. And remember, markets are psychological just like anything else. All right, we follow the charts, we follow the psychology. And when we're coming down to a necktie, you look at that as being good support, but you have to understand to give it a little leeway. And so far, we did push through it, and we did push through it on Friday, and we closed basically flat again today right here. And now the question is, can they push it back above to get ready for the blast off, the next move higher that we're seeing? Now, This week is going to be a crazy week. Monday was a relaxed day. I do not personally think that the rest of the week will be relaxed in any shape, way, or form. And you guys might say, well, why? What's going on? Well, number one, economic data this week is going to be monstrous. Tomorrow you got the PPI, Producer Price Index. You got the CPI on Wednesday. This is both major market moving activity or economic data because you're dealing with inflation. Now, why is inflation important? Because you have the Fed and interest rates precisely linked to inflation. If we show a lot of inflation in producer prices and consumer prices, it's going to be very hard for the Fed to continue to lower interest rates because it's only going to speed that inflation up. Should it come in less, then the Fed has more leniency to lower interest rates, which ultimately the market will want based on the mortgages and the credit issues and all that kind of stuff. So keep a close eye on that. We all know food has been racing up. I just saw a statement on a news wire saying something about how food is moving as fast as it has in 17 years, price-wise. It's just shooting up ridiculous amounts, and I think we've all seen that in stores and restaurants. But in any case, this is still a very bullish pattern. You're seeing a retrace. I actually will calculate this for tomorrow's video. I'd be curious to see, from this point to this point, what retrace is this? This looks like a 0.382 possibility. Maybe we need to go to 0.5. All right, that's a Fibonacci number, and we're talking Fibonacci sequences here. In addition, I still want to focus in on this head and shoulder pattern that's a possibility of forming if it comes to fruition. I pointed this out quickly on Friday, didn't really go into it, but here you have the shoulder possibly forming. What we want to see is this come around like this and begin to move up. Then once this line breaks, this is an inverse, and let me clarify that, folks. This is an inverse head and shoulders. So inverses are bullish. You look for moves up once it breaks this line. So what you're going to look for here is, do we bottom out here? Do we begin to inch back up? And when we break this line, bam, watch for a move up to that area should we break that inverse head and shoulders. And again, we're still watching for this to form. All right, so this is the way we're looking at it right here. You got a shoulder possible, a head possible, and now the right side of the shoulder, and the lines match up perfectly. Notice how this line connects to this line, connects perfectly to this point. So again, it's going to be a waiting and see type game, and as we go into Options X, I want to focus more in on that craziness this week, but you guys know Options X is always ridiculous. The movements are volatile. You're going to have major swings, and I think starting tomorrow it's going to start. I think maybe tomorrow morning we'll see a little action on that PPI number. In addition, you have earnings this week, just monstrous earnings. You have many of these financial institutions like Bear Stearns reporting. All right, people are going to want to see how this is. How are these financials doing? Is it worse than we thought? Is it better than we thought? The markets will key on their moves directly off of that, especially the XLF, which is the spiders for the financials. Okay, and here you can see the spiders, and this is the XLF, the financial spider, how it's moved down over the last few sessions. Now we're going to start getting these earnings from these financial firms. Does it move back like this? Do we collapse back to a double bottom area like this? Or where do we go? We'll have to watch that very, very closely. The pattern is, whenever we sell off into news or whether it's a stock or not, we somewhat favor the upside, but we never do play this. We always wait for the earnings to be out of the way so nothing can surprise us and we can trade purely on the charts. All right, so again, earnings this week, you got Intel tomorrow after the bell. You got eBay this week. You got Google on Thursday. You got IBM on Wednesday. So there's just a massive amount of tech earnings as well that's going to cause this market to go crazy. All right, can IBM do as well as they did last quarter? Has the weak dollar continued to help them in their earnings? That's another big issue that we're going to have to find out. And Google, to me, is the number one this week. If Google blows things away, there's a lot of concern out there that ad spending on the internet is slowing big time. And Google will see a direct hit to that if that is happening. So we will have to see where that heads and where that goes. So there's three facets here. You got options expiration volatility, where the market will take the market. The hedge funds and the large players will take the market the opposite of the psychology. So if there's too many bears, we're going up. Too many bulls, we're going down. Okay. In addition, you got the earnings coming out, the economic data. Overall, it's going to be a wild rest of the week, I think. We still see the chart pattern setting up for a bullish move coming very shortly. Whether or not it's later this week or into next week, it's still up in the air, but the chart is setting up for that, and we will continue to follow it. Now let's quickly look at the NASDAQ, and the same thing goes to the NASDAQ, and I'm going to calculate these fib numbers for tomorrow's video, so I'll make sure to try and do that. But again, you had a move from here to here. Now how far down are we retracing? All right, and we're going to follow that and continue to follow it to see exactly where we go in that respect. But I'm sure right now it looks like about a 0.382 Fibonacci retracement at that point. We'll continue to focus in on it. Okay? Other than that, all I can say, guys, is be safe. Continue to trade with cautions. Option expiration is notoriously the wildest week of the month. Whipsaw Wednesday, we coined that term to display the Wednesday prior to Options X. And just be very, very careful. Come join the Swing Trade Alerts, the Options Alerts, the chat room. Do private consulting, institutional consulting, whatever you guys, your heart desires out there, we can take care of you. We'll make sure that you guys understand the charts and understand how to make the best money you can possibly make. Take care. Have a wonderful day. We'll talk to you soon.